Sick ass beats. All right, what's up, guys? What's good? What's good? Hope you're all feeling amazing. Okay, let's get into it. I did drop a video yesterday on FTMO being back in the US. If you haven't watched it, definitely check it out. Played some different types of jams this morning. I had one sneak in there that was like a they like remixed some Mario Bros like sound. It was classic. But anyways, let's dive in. How are we feeling? We had a couple mitigations yesterday that all that they did was just kind of give the bounce and then just break even trades basically. NVIDIA earnings definitely caused quite a bit of movement for the market itself. So for those of you that had some of our older setups lined up, and you're able to trade right before the close of the day, then you may have had amazing entries. If you're trading futures with Top Step, then you wouldn't have been able to trade any of this, which is unfortunate. But if you did hold or have your limits set, then just about a 10-hour so far on this NASDAQ buy. But yeah, we have a lot that we can get into today. So let's dive in here. Let me pull up the chat. And then let's see here. What's up? What's up with the screen? It's just depending on how wide or not I want it. All right, first let me say what up to everyone. ¿Qué tal, Carlos? What's up, Patrick? Amy, we got Moving Wicks in here. Seth, Giovanni, Gabriel, Corey, Omar, Harshi, Karen. What's good? What's good? Disciples of Amok. Greg, you're funny, bro. You always correct me. What up, Joe? Lonzo. Defi, what's up? Beautiful Thursday. Absolutely. Hi. What up, Diesel? Good day. Good day, sir. See you soon, man. See you in Colombia. Okay. So let's break it down. Let's start to divide and conquer here. Split screen this up. Let's get NASDAQ here in front of us. Okay, so market post earnings have been very bullish. Very, very bullish. And as if you guys are noticing here, right, we've made higher highs with Dow continuing to push higher and higher up until London session. During London, we peaked out right over here. So right at 45,800. If we zoom out a little more, so just taking a look at where we're at here, we peaked right around where we've seen these highs with Dow before. This was on Friday. So on Friday, yeah, we got highs right around here. And just to make sure we don't get caught up in any type of liquidity, always want to draw out and see, what does resistance look like over here? What do these previous highs look like? Do we have liquidity or not? And it kind of looks like this previous high over here does create just close to equal highs. It's a few points out, so this does make us any sort of sells from this area a little bit more likely to not play out. So, but we'll see. We'll take a look at it. The one thing is that during Asian session, indices are really bullish, but it isn't until London where Dow starts to lose momentum while NASDAQ is still pushing further along. So now we have already mitigated this on NQ. So if you zoom out on NASDAQ as well, we're already playing out of this area up here. This was Tuesday, 19th. So I don't see us rejecting anything else over here. We already closed out the buy position when we saw NVIDIA earnings spike up and then tank. So this kind of gives, in my opinion, a little bit more trajectory to the upside. Like it wouldn't just stop here. And so, yeah, if we're comparing price action since London session, NASDAQ is significantly more bullish. And we have 5 minutes till New York open. But, yeah, we're seeing more and more movement to the upside with NQ. And meanwhile, YM, Dow over here, is definitely struggling to move on up the same way. So what could we see here? Well, we had Dow during London push higher one last time here before starting to make its move down. To be honest, though, like this doesn't really take out a whole bunch of liquidity. It's really just kind of took out one high right there and then worked its way down. Quick move up before continuation. For this to go bearish on the 5 minute, we would have wanted to see this low right here, a break below this low, and then creating lower lows, like staying in a bearish demand. When the market just kind of briefly breaches the low and then comes right back into the zone, it's more of a sign that it was clearing liquidity, or in this example, filling in balance, rather than just being bearish. This isn't, for me, this is not a sign that we're now in a downtrend, at least in the 5 minute. This looks like it's just losing momentum. So there's a couple things that I think we could see happen now going forward, and it's gonna definitely be highly dependent on the market itself and if it goes lower or higher first. But looking back at how the markets played out, I mean, we saw the earnings caused a massive move up and then down. So look at how money comes in and then instantly, like this here. This is the first place where we can look for a bit more liquidity, see where money comes in and out. So for example, on NASDAQ, you see it take out the high first and then drop. If we go even 15-second, we'll get more detail. So you see the move up, and then you see it come down, come up again, come down. I actually see it happen a few times with Dow. Come up again, and then come down. So you can see a lot of detail here. So right from here, basically, we crash and then start to move sideways before it goes long again. So this is really the beginning of the move to the downside with Dow. And then if you look at, for example, NQ, this just tanks from way up here. It stalls out there, comes up one more time, and then we see another move to the downside. So this is just getting down to the absolute smallest time frames. And this was the final drop before the market rallied. And then we see this just, go crazy. Now, this kind of setup, in my opinion, looks like what we call, the shakeout, where it builds up tons of liquidity and then it runs. So here we take out these lows. Dow here did the same thing. Takes out liquidity, fills in imbalance. It still could go lower, in my opinion, on Dow. And then from there we have the rally. Doesn't mean it's going to happen now. It's going to happen later. So here we're seeing the market squeeze and then seeing it run. Look how much more quickly Dow starts trading above the previous highs while NQ takes its time to go up here. This is important because now we start to understand a little better. Look at how liquidity was built up, and then we see it push down before the market ran. Same thing here. It moves sideways, takes out the lows, and then it pushes higher. And that'll bring us, just to accelerate this, that'll bring us to the present. So what are the opportunities? There's a few. Starting from way back here, we see, for example, Dow pushes during Asian session. We get the move down, and then the market runs. So you see the same thing happen here with NASDAQ. Get a nice move down. Then the market takes the high, keeps on trading. It looks to me like buying NQ is going to have the better opportunities, considering how strongly we're seeing Dow start its way down. So this is already kicking things off to the downside pretty aggressively. Now, it did eat it up. It's ate up this low pretty fast. So we'll see if it stays like this. But yeah, right now, it's looking like longs with NQ are going to make more sense. We have a potential down here. You had another setup here. This is where we had liquidity build up during Asian session, a bit as well here, and then it runs. And then now we're seeing just like how it happened yesterday, where the market's moving opposite directions. So, and NASDAQ's going higher, Dow's going lower. We've seen in the past that these have the ability to sometimes reverse. So even though these are in opposite areas, considering the fact that Dow is not at an extreme, like this is kind of still within the range, I could see this break below this. So I'm not going to take a position on Dow as much as I think we could see this reverse from here. And you know how I always talk about the trade of the lagger, right? So since we're not really trading anywhere near, like, for example, here was the previous low and here's the high. So we don't want to get involved in something like this. So it's a low probability play. So you see how we've seen a lot more support over here. This is more likely where we get a reversal out of Dow. Like you could see it happen in here instead. So just to give you guys an example, since these don't look like they're going to be on the same page today, here's where we've seen this last point of supply. So look at all the support that's happening over here. This is where I could see Dow reversing, since this is where smart money comes in, liquidates all of these buyers. I do think we could see a reversal from Dow happening a little bit lower. It looks like it's already coming in though. So it took out the lows from Asian session. These are the Tokyo lows if you wanted to get this right there. So as soon as it took this out, now it's starting to run. So it takes out any sort of buys so far on Dow. Meanwhile, NASDAQ over here, despite this is where New York Open kicked off, I wouldn't take any trades in here. You just have retail lows right there. So as of now, we've already seen Dow clear Tokyo lows. I don't really know how you could have rationalized buying here and then having an 80-point stop. Like right now, you would be up maybe half R. Unless you place your stop loss just somewhere else, having nothing to do with structure. I guess I could see that. But yeah, not really it for me. And then we have what's good everyone that's joining in. What's up, Friso, Hector, Brandon? So we do have liquidity here. Getting below New York Open, I think, makes a lot of sense later on in the day. We did have the market just, as soon as this came up, came right back down and then rallied. So this definitely could have lured in a good amount of sellers for us to see the market push a bit higher one more time. So I could see reversals at NASDAQ here. There's kind of a decent amount of opportunities actually for entries, which is not always the best scenario, because this is where, you know, sometimes the market will do something like this. So just to give you guys an example. So yeah, I don't have any immediate setups. It doesn't seem like we're gonna, at least for me, I'm not gonna get anything until later today. But sometimes you'll see the market, you know, do something like this. You know, it could work its way down. You get a little bounce, and then it goes lower until it finally like goes. So when you do happen to have moments like this where you have, like, you know, let's say this doesn't really take out liquidity, it just rebalances and then runs, but you have those types of big sell-offs before the market then goes in the opposite direction. So you have moments like this. They can definitely still get a good bounce, but it doesn't mean it's going to, you know, give you a massive risk reward. So NASDAQ now took out the highs, came in to trade into this imbalance over here. Here's where I had another zone for sells. And then now it's bleeding out. So, okay. This could be the sign of a sell. So now they're on the same page. We're seeing NASDAQ push down, Dow Jones push down. So now these are both going in the same direction. Now they are correlating nicely. This is where things can get a little bit easier to trade. And then if you look at S&P, ES also finally took out the highs of the highs for the today's London session highs. So it took out the London session highs here, and then look at that, S&P played out perfectly here with the Nvidia earnings as well. So this took out the highs from here. Played right into these highs up here. So S&P borderline creating liquidity up there as well. I'm going to set an alert up here. I want to see ES take out those highs. But yeah, we're seeing it crash now. Huge move down. So ES pushing aggressively to the downside. NQ starting to work its way down. So we're definitely seeing more momentum with ES to the downside than NASDAQ. And Dow is just continuing its movement to the down, to, you know, lower and lower. So Dow remains being the most bearish. That's why buying Dow Jones, buying YM, does have a bit more risk. You decide how much you're risking, but I'm saying setups itself playing out when you're buying Dow Jones right now. This is where you'll see your setups fail more often. Like your mitigation trades, like you can start to see them fail more often because there's just so much more bearish pressure on Dow. And so, for example, if NQ is going to fill the more of this imbalance, then as we've seen already, that can just push Dow further down. So I would rather not take this. Yo prefiero no comprar Dow, ya que es mucho más bajista que Nasdaq. Prefiero ver compras con Nasdaq por acá. So I would have loved to be in sells with Dow. Obviously, all of us would have. But honestly, I just there wasn't really much to take. At least not with our entry model. Either of them, whether it's mitigation plays or shakeout, there really wasn't anything to do here. So, yeah, I'm holding off. It is enticing. You know, you've seen the market now drop in front of your eyes 100 and almost 200 points in 30 minutes. So you're like, oh man, I want to be involved. I want to get in on something. But, you can't just don't trade your feelings. Don't trade your your impulses, your desires. Just you got to trade what makes sense. So we are starting to get a little bounce. Here's where we've seen, support in the past. This is what we consider last point of supply. For those of you that are a bit more aware of Wyckoff. So, mitigation plays will fail is when so for example, in this case, this is the market's trading where we had the NVIDIA earnings, right? So it sold off aggressively, it took out liquidity, hit the imbalance, all that good stuff, and then it ran. Well, if we look at NASDAQ did the same thing. Huge spike down, took out liquidity, moved sideways, and then started to move on up. When mitigations plays don't play out is when, or they're more likely to fail. They don't always fail, but they definitely fail more often. It's when you have two setups that can play out, like they could here between NASDAQ and Dow. But when you want to buy the one that's, for example, if you want to buy, you don't want to buy the bear. You want to buy the one that's the least bearish. If we were to compare NASDAQ and Dow, which one's the most bearish right now? It's Dow Jones by a long shot. So, like I said, sometimes these do play out, and they end up meeting somewhere in the middle. So, for example, and in this example, I could see it happen. Why? Well, we don't have perfect correlation right now between NASDAQ and Dow. In actuality, they move in the opposite directions so far. So we've seen a lot of momentum to the upside with NASDAQ, whereas Dow just kept pushing lower. And this has been happening all week, which is kind of the trickier of price action. Off of New York Open, they moved away from each other. And then a few minutes later, they start moving together. They both start dropping together. Then they start moving away from each other a little bit. Now they're moving down together again. So since NASDAQ is trading so much more bullish, it has a lot of incentive to keep dropping and to get not just to this level or this level or this level, but just to go lower. If they stay correlated, then that could keep pushing NASDAQ lower and lower and lower. So if they do get back on the same page, that's when these plays fail more often. Because this is already trading way down here, and NASDAQ has a lot that it could drop to cause this to go, trade down here or down to here or down over here. So that's how you can just have a bit more. These are more vulnerable trades, basically. Is my whole point. Can they still play out? Yeah, I mean, even now you're seeing it all right, it's starting to get a rejection. It's up 20 points or something. Typically, let's say, and here's the thing. The only reason I have all this data was because I was noticing it. I was like, man, that's a good setup. Why is it not playing out? And then I would look at NASDAQ or vice versa, and I realized, oh, okay, this one could still drop quite a bit. And then, so if NASDAQ starts to want to play down here, you're going to see Dow just go do the same thing. So that's the whole point, basically, to what I'm talking about. So, yeah, I prefer to buy the indice that gets to its zones last. And sometimes, and we saw it happen this week. There's actually quite a couple good trades. But, yeah. Maybe possible shakeout play if S&P if down will be bullish. Yeah, we'll keep track. S&P is somewhere in the middle right now. It's S&P took out some of those highs. It did go right up into liquidity, so we'll see. We'll see what happens. it's funny because these are the type of days where, you know, I'll be a bit more cautious, and then every once in a while we'll have one trade where I'm like, yeah, I could take it, and I don't, and that one totally runs. but yeah, it's okay. Anyways, that's indices. We can go look at a few other things right now while we let the market just kind of unfold here overall. And then here was another play, right? So we had NASDAQ, because there was a second idea, which is NASDAQ takes out liquidity, and then it immediately lost momentum. Ideally, in these scenarios, when the market takes out a high, immediately crashes, I want to see the market like maintain those lows, so that if we were to come back, then we could sell. Here we dropped and came back up so fast, not really getting proof that we're super bearish yet. So I do think there is a chance we go a little bit higher. So yeah, as of now, I'm basically waiting for NASDAQ to get down to these levels before I get to any buys. Okay. Yesterday, I had this Australian idea here marked up, and this is the reason why this trade did not play out. So this is what happened. Yesterday, we had the market take out the high. Great. You know, this is Asian session. I think it was CPI, takes out liquidity, and then drops. It's working its way down. Here is where the issue was with this trade. The market gets below these lows for a couple hours, but then the market just rips to the upside. So what do we notice with this? The market was more focused on clearing these lows for the sake of clearing liquidity, luring in, taking out buyers, luring in sell stops, and then the market just rips. So think about it this way, and this is a way to kind of, whenever you have a setup or it looks good, if you notice the market as quickly as it went down come right back up, that's a really good sign that this had no intention of being bearish, of creating lower lows, of being in a downtrend. This, the way it comes down and comes right back up, it's not really proof that there's more desire for orders at these prices. If anything, it just showed, okay, yeah, price came down, but there's an overwhelming amount of buyers still at higher prices. So there's not really that much demand down here for these things to stay in a downtrend. This came down, but it was just a discount. And then this ran. So now, ironically, this is actually this setup for now a buy scenario. And this is what you call a reaccumulation. So if you ever go and study Wyckoff, that's reaccumulation. So this happens a lot. You had the move to the upside, took out liquidity. So this does really look like it. If you're just trading patterns, then this looks like some sort of smart money pattern. But we have to go beyond just a chart, beyond just some candlesticks. Like, you want to make sure and see, look, this is what I'm talking about, guys. NQ going lower, Dow still pushing lower. So we want to use our understanding of of just how the psychology of money in these markets. And so if you ever see that, like, look how fast it dropped and look how fast it came up, and you ever have a setup like that, these tend to fail a lot more often. So it looked like a selling opportunity, a distribution, but the fact that this lasted not too long, and then specifically we just saw it rebalance so quickly, that's what that was going to look like. And now we saw it happen across the board. Look at this. Pound, same thing. We saw it clear the lows and then run. So now we have a similar perspective here with the pound. So this happened across the dollar just in general. Like, we see a big move down here and then it ran. So you can mark this up, whether it's from the top or if you want to refine the entry, cool. Now, which one are you going to take? Again, the one that gets to the zone last is going to be the winner, because the rest of them could just break below the previous low briefly and then run. So, for example, with Australian, this is trading way more bullish. It's way beyond these previous highs. The pound, it went bullish, but it's already losing quite a bit of momentum. Canadian futures mitigated here and then called it a day. Euro barely holding the highs. And then we had the yen. The yen also kind of made a nice move. Played out of here, though. Look at that. Nice little move right there. Anyone catch? I think, Michael, you had this short, right? On the yen? So, and NZD, look, NZD had a similar move. Goes lower and then expands. So, across the board, a lot of these have similar setups. Very similar. The yen, NZD. So you're going to go crazy, right? When you're seeing all of these ideas and you're like, which one do I take, man? Like, which is the winner here? What can I do? And so you even have it here, another one here with the euro. And again, my piece of advice is just wait for the market to come to you. So wait for it to drop, and then only take the one that gets to that zone, the one that takes the longest to get down here. That's going to be the winner. It looks like it's going to be Australian. And then if you look at how the markets have been shorting out of here, so was there an entry opportunity anywhere? It looked like the yen had a nice little order block to sell out of, but doesn't mean you have to be in the markets all the time, just because it could have sold somewhere. All right, let's see, quick update here with indices. So Dow pushed lower, filling an imbalance, starting to push higher again. And look at this flip. So this is, okay, perfect. So look at this shift in price action. So you don't have to force yourself into the market or anything quite yet. Look at how we're seeing everything flip-flop. So, I didn't take an entry here on NASDAQ for obvious reasons here. What the fuck is happening? There we go. So, we start to push again. Here, now we clear liquidity. We're not below any sort of significant lows, so this wasn't really anything we were looking to buy anyways. But look at how price action is starting to shift. Now, this is why these are the most annoying days, because you don't know when they're going to start flipping direction and when things are going to get more or less intense. So now we're seeing it all go down and up together. Okay? So now these are moving on the same page. NASDAQ dropped all the way down to here, created liquidity. We had Dow push all the way back down to these levels where we've seen resistance before, so it took a nice little bounce. At the moment, I think we still go lower with NQ, and that probably pushes Dow even further down. We'll see how aggressive the market keeps going here. But what I am noticing is now we're starting to see NASDAQ have a much more aggressive move to the downside. Look at how it's pushing further and further down, whereas Dow is starting to drop at a way less aggressive in a way. Look at this. NQ, if it clears these lows first, and Dow takes a little bit longer to go lower, we're starting to see the shift in momentum. Because remember, trading isn't about just getting an entry. It's also about disqualifying setups. So right now we just took out this previous low by a couple points, basically creating equal lows though. So not a huge fan of taking any buys out of here. I think there's just a lot of support over here. So the biggest thing is fighting the urge to just chase an idea. Like, oh, I missed all this movement. Let me get something out of this. And then meanwhile you have S&P that just cleared out a pretty decent amount of liquidity. So London lows have been cleared out for ES. And then ES can still get down to here. Still got this right over here. I'll place a little alert there. I do think we can still go lower to trade into this area here. And then that could bring Dow further down. Here, I'm willing to take a shot at this if it makes sense. We'll see how we're working our way down. So I'm going to place an alert right here. Let's see if we go lower. While I'm looking at some other stuff here for you guys. All right, metals. I know we got huge. It's a lot of traders here, guys. Our 1 minute setup from yesterday. I want you guys to look at this. This trade was crazy. This trade was actually crazy. This ended up running for a 27R. So at least with this trade, we can see that 1 minute setup is pretty valid, especially because look at how efficient it was everywhere here, except for down here, but everywhere else, like the market had already rebalanced, mitigated. All right, so here we go. NASDAQ still pushing even lower. Here's the thing though. Look at how much more aggressive NASDAQ's dropping compared to Dow now. So Dow definitely holds, it's starting to hold it down much more aggressively. Now we're just clearing these lows, starting to fill some of this imbalance. Okay. And remember, Dow could still mitigate out of here. Now, comparatively, NASDAQ is still trading way higher in the structure because NASDAQ's basically trading like up here right now compared to Dow Jones. All right, now they're starting to get some more momentum after we saw this clear the lows. I'll say that this kind of price action, and I think I've already said it today, but this is where it's a little bit more of a struggle on how to make decisions, especially if you're looking at, if you're just in between, you know, NASDAQ and Dow. So like it's just a lot of volatility, a lot of back and forth. NQ at the moment still seems to be significantly more bearish. But since I've now sneezed on this session, we already know that's a good sign. Chat knows. The sneezes are in. Salud. So funny. There we go. All right. Opinions on Dow reaching yesterday's mitigation or just clearing imbalance? Yeah, we're off. Something good is on the way. That's so funny. Yo, I want to say I appreciate you guys for showing love to yesterday's FTMO video. By far our best performing video in a bit. I don't really upload too much, so I guess that doesn't help. But yeah, let me know. And yeah, let me know what kind of other videos you guys want me to make on here for you. I have a question for you guys. If I did this, how would you be interested in following along? If I did if I basically documented the entire process of going from what is this thing? Starting from 0 on FTMO and going and getting to Supreme. And I documented the entire thing and I uploaded it like day 1, and I did it this way. Start with a 10K, pass it, then a 25, then a 50, then a 100, then a 200, and I documented every trade, my thoughts behind everything, how I went about it, and whether I pass or I don't. Would you guys want to follow along with something like that? The confidence in doing that is insane. I mean, why not? Either it's epic or you guys get to watch me publicly humiliate myself, Do it. All right, cool. I'm interested. All right, cool. Yeah, I don't know. I think 1, it's just a cool challenge. 2, it's high levels of accountability, and 3, this is the most important one. I think having an inside look in like what it's like to do it, and actually starting from 10K, which is where more people are gonna be able to kick things off. I just think it's gonna give a lot of insight, and hopefully it gives a lot of confidence to anybody doing it. Assuming that I can, obviously, historically speaking, I should be able to pass this. I don't think I've actually failed an FTMO challenge when we had them. So we'll see. But yeah, I think it would be really cool. I think it'd be valuable. And yeah, there would be uploads. So I'd walk you guys through just like, all right, like some of the trades, we're going to be here when I'm taking them. And then others, will be on my own. But, like, I'll just have cameras on, screen recording, and all that good stuff. If you're doing it, I'm watching. All right, sick. Cool. All right, so let me not distract too much with that. But we just saw NASDAQ clear the low here. So nice little clearance of liquidity. Fills in imbalance. This is taking out the low of London session. So now we've cleared London session lows. This is where we could possibly get a buy setup. So whether it's going to be NASDAQ, and this aligns with how Dow was holding up pretty nice here. But check this out. So now that NASDAQ has cleared the London lows, and I'll label this for you guys. It cleared that liquidity, and then we started to work our way higher. If we can trade here, if we can kind of like build up some liquidity here and get another pullback. So if we saw something like this here, say something like that, and then I think we could get another move to the upside here. So I would like to see something like this. And then assuming when we pull back, NASDAQ's what pulls back the least aggressively. Yeah. Wow. Yeah. Damn. Kronos. Kronos is crypto.com's coin, right? Shit, I might have some of that actually in my crypto.com wallet. I haven't looked at that wallet in a really long time. Yeah, so the goal would be that. Okay, so I'll get into this here in a second. If we get a pullback, I'll have an alert here set. Kronos is not? It's not crypto.com's? Really? I thought it was. But all right. So metals, anyways. Metals, bullish, ripping. I'm still holding my silver buy from June. And gold is approaching this big move that we were looking for shorts out of right here. In order for me to take that, though, I want to see what we're at with silver. Silver's been ripping too. Okay. Yeah. Awesome. So, yeah, this was from August 8th with gold, whereas silver, we're way, way, way beyond that. And it looks like silver is getting closer to over here. So, all right, interesting. Okay. So, back to NASDAQ, we, cleared those London lows. The market came right back up to here. And then as soon as it goes up again, we are starting to see a bigger drop. Is this a green light for a buy? I really would have preferred us to trade higher for longer. Could it play out? It could. But I mean, I'm not so quick to just kind of like rush into this decision here. Yeah, I would have preferred for us to kind of get stronger, like be here for a little longer. This is a very good level though. So, yeah, is this a bit look? Well, yeah, it looks like it's playing out. So, I didn't expect it to drop that fast. I would have rather really preferred us to get more support or more to trade up here a little longer, just to show us like, yes, we're bullish, we want to hold the high. But yeah, it came back down exactly to where we wanted some buy positions, and then it's ripping again. So yeah, I mean, if anyone here decided to take the position, you had a minute. Nah, you had like 15 seconds to pull the trigger. So it wasn't like you had all the time in the world. But that was the NASDAQ buy. This is what we call the shakeout, where the market clears liquidity. Typically, it clears, the lows of a session or sometimes multiple sessions. And then we see the market go away from it. So as soon as it drops and liquidates, we saw it trade beyond it. In this example, we don't really get too much bullish demand. The market just comes right back in, and then it decided to pack its bags and go for a flight. So there it goes. Apex account. Yeah, so with prop firms, with futures prop firms, you can't hold trades for going into a new day. At least not any that I know. Maybe there's one that has like swing trading, but I haven't really seen that be a thing. I think it was in the past. I feel like my funded futures did that at some point. But not, yeah, I don't know. I don't know if they still do that. But you can do that with certain CFD accounts. So like with FTMO you can, and I know with, there's plenty of them that you can do that with. Just got to read the rules. Obviously with your personal accounts, CFDs or futures, you can hold the trade. With futures, the margins kind of change when you have an overnight trade. So you do have to have enough margin to hold them. But with CFDs accounts, yeah, you're chilling. Yeah, it's on a personal account that I'm holding silver. It's a small trade. Yeah, I closed out the majority of it. It's just like a small position for the sake of building the swing trading muscle more and more. But I historically have good swing trades with silver. All right. Anyone catch the buy on NASDAQ? Anyone pull the trigger? This is what we call like a shakeout. And with this kind of trade, honestly, looking for exits at or around here is a pretty good area. So here's where you have the market bounced. You saw buy orders get created to lure in buyers with the break and retest, and then it just bled through. So taking profit in this area is a good place for profits. And a trade like this, you would be looking at, it looks like about a 2R already. So something like this, yeah, this should be a nice little profit. If this was the trade that we were in, had I pulled the trigger, which, I'm transparent, I didn't, then, yeah, I would just take profit. Quick little 2R in a matter of like 4 or 5 minutes. That's just me. The only reason I would take profits so quickly is because I'm not fully convinced we're done dropping for the day. Not that I have anything to, not that I could sell here, but yeah, I don't know. Yeah, I don't know. I'm not really sold on the fact that I don't know if we're done pushing down. We might be, maybe we are, but we have, you know, the sell off here. We have another example down here. So I would rather take, you know, what you for sure have than to just kind of keep hoping for something. And then same thing with Dow Jones. Like we still have multiple other potential areas the market can trade out of. So I feel like we're going to end up seeing Dow trade all the way down here. And by the time Dow works its way all the way down, we could see NASDAQ finally make its way to like these areas over here. So we'll see. Yeah, I've been just basically out of the game with indices all week, sadly. So the play on gold. Gold here. So to walk you guys through this, we had a very bullish move to the upside here before the market crashed. Saw another, you know, it filled up the imbalance again, and then it goes down. So let's go into here, and then that way you guys can kind of see what what I'm looking at, why I'm looking to sell over here. So gold opens up a massive position that takes out highs here and trades right near up to the zone, but this clears up a decent amount of liquidity. Specifically, it just lures in a lot of buyers too before it starts to come down. We get a buildup of here of more and more buyers, and then it just, you know, melts. So selling around here, I'm feeling like 34.85. Here we've seen a lot of support. So right around these zones. We've seen rejections before. That can work in the opposite direction. So selling out of the zone seems like a good idea from earlier in the month. And that brings us to here. So a short out of here. I think we could have a good trade. Yeah, right there. Right there. Considering these are close to one another, this could be a motive for price to go higher. So if you're like not entirely in love with these types of highs, then either cut your risk down or don't take it at all. The fact that we are, you know, overall, like silver's been much more aggressive to the upside, that gives me, I think, some confidence here with this idea. And then the question becomes, do you want to have your stop to here, since we already had a pretty big another move to the upside, so that way you can tighten up your stop and have access to a better risk to reward. And then if we go like 4 hour, if I look at this from a higher time frame perspective, it feels like, here we go. Here's what we're looking at on the daily. Because we've been chopping, we've been just consolidating for quite some time. And this last one on this candle here, this was the 8th, right? Friday on the 8th. This move to the upside took out quite a bit of liquidity. So, like all of these highs. Not this one, though. So, could we still take out all of this? Maybe. Or, since we already cleared out 2 different highs from each month, like we took out May's high, June, July, is this going to function as the next one? And then we can kind of swing back down into these levels. So the interesting thing is we're not quite breaking below anything on the higher time frames. Like we're just squeezing. And you either, so this is why I think the risk reward is worth it though, because you either catch a high here, and then you can write it down into, let's say, something like this. You know, just trade it into these areas, especially if you're able to hold CFDs or futures, you're trading your own account, then you have a significantly better shot at a pretty good move. In the past, we've also seen the market within a day drop hundreds of pips here, 300, 400 pips. So that could be today, where we see a significant move. Like this was Friday, August 8th, and then by the end of the 8th, we had, dropped from 34.90 all the way down to below 34.50. So like 400 pips. So let's say you're going to take this within the day. Would it be worth it? About 400, 300, 400 pips. Still would give you a 2R, maybe a 3R. So, yeah, I think it's still worth it risk-reward wise. Yo, Mike, just got accepted for this job opportunity. I got syndicate loading. Yo, congrats, man. Congrats on the new job. We're excited to have you here in the syndicate. I will add, for everyone that's on right now, I don't really do this, but to celebrate FTMO's return, anyone that does join the syndicate before September, I will also get you a FTMO funded account to go along with it. So if you ever wanted to do it, and we're going to be trading this thing together. So if you ever wanted that high level, high touch coaching through this implementation, the whole works, definitely book the call. So yeah, here, I'll have you guys scan just real quick. I'll go back to this screen here in a second, but scan here, scan the QR code on the right. And then obviously guys, first you want to find out if it works, if it makes sense, if it's for you, if it's a right fit. Transparently, we do reject people because for some, you're better off just stacking up a little bit more and then being in a better position financially and that, which will help you be a better trader psychologically. And then sometimes depending on scheduling and depending on how committed or the amount of time you can put into it, it'll make sense or not. That's why we have all this free stuff too, so to make sure you're prepared and you know the right expectations. Because if you're newer to this, if you're like super new and you don't even know if this is something you want to do long term, this is a 1-year commitment, which should turn into a lifetime of progress. So yeah, there you have it, guys. Scan the QR on the right. And if you're not in the free community and you want a whole bunch of awesome stuff, then scan the QR code on the left. All right. So, and as always, guys, if you're enjoying this session, like, subscribe, and feel free to share this on your socials. You said it mitigate on your end. So you're looking at gold like XAU, I'm assuming? XAU, right. So XAU, remember, when you're looking at gold on CFDs, you're getting an entirely different type of price feed. So that all of it looked very different. It looked like a lot of consolidation, a lot of liquidity. It's trading significantly higher, trading all the way up to here. So, but remember, gold's data feed is based out of, it averages out, it smooths out. So it's kind of like, it's definitely going to be a little different and, in my opinion, a little bit more inaccurate. So, yeah. All right. So I have that there. What I'll do now is I'm going to go ahead and share this on. Hold on, let me make sure I'm screen sharing. Yeah, okay. I'm going to go ahead and share this on here in the community. So we got today's setups. August 28, 2025. So we have gold. And then here's the image. All right. There we have it. Okay. Let's see what's this market doing? So NASDAQ, I think we nailed the high, the exit there. Boom. Did anyone take profit already on NQ? Anyone listen to me or not really? I don't know if I'm going to be right, but I know for sure it was a high probability exit point. All right, so that sets a tone there. Let me just make sure I got the alerts set up. Okay, yes, we do. Perfect. So we're about 180 pips away, which honestly can happen. Great. Natural gas. Oh, I think Seth, you were telling me that there was a setup starting off or something with natural gas. I just retired from natural gas. Just completely. I'm not even dealing with it. Oil sells yesterday. Yeah. The disrespect, man. The disrespect. So it missed me by a pip. One damn pip. And then it sold off. So I think a lot of you hit your 2Rs, 2R plus. Came back in and then dumped again and traded down here. It looks like we mitigated again. So if you sold off a second time on oil during London, you got it. And then now it's looking like another move to the upside. Squeezed a bit before dropping. So honestly, we might have a play here on oil. And missed your exit by a pip. That's rough, man. Where were you looking to exit with oil? In here, like this one? It traded below the liquidity into this imbalance. Like, how much did you want out of this? Joe, you get greedy. Yeah, this is like back to back to back to back to back. Now, the key thing, if I'm going to look to short this thing again, well, not that I've been able to get in, but I want this low though to stay over here. Like I need this homie. This has got to work its way down. This has got to stay down here. Then, cool. I'm game, but need this first. So not quite there, but it could be there. So we'll give it some time. Peso didn't trigger for me yet. It got close, but no cigar here. And good thing because I apparently didn't have an alert set up, so I would have missed it. Yeah, it's definitely holding down. The interesting thing is it's somewhere between, so we might have a hedge position here because now it looks like we have a buy zone and a sell zone. So it worked its way lower, but just as fast as it went down, it went back up. So the buys on this look good too. So I'd say we have kind of two options at this. It kind of depends on what happens first. And then, yeah, I would look to take a buy position on this. Kind of definitely depends on the kind of pullback we get. Now with the stop loss, you could get away with tightening it up a little bit since we already had a sell-off here and then the rally. So something like this could play out nicely. And then the exit kind of has to depend on how we work our way down. So for now, I'm just going to, let's say like a 2.5. But yeah, this is what peso is starting to look like here. Depending on how we work our way down, this might go longer. This could go shorter. We shall see here. Let me go to the 4-hour real quick. Let's see. Zoom out a little. All right, the daily. Let's see, higher highs, higher lows, higher highs. Here we see a failed low. So this just liquidated buyers, lured in sellers, then ran. So we're still working with this as our daily time frame lows. The market's basically starting to squeeze. So if you look at it from this perspective, we're definitely building up retail liquidity this way. So breaking through a trend line at some point looks like it would make sense. We're losing demand so far every time we get up to here. So this does look like it would be a valid short. Okay. So I'm going to be mindful of this build up, this trend line building up over here. That's a lot of liquidity. But intraday, at least for both of these, look promising. That I can say a bit more confidently. Okay, so we'll drop peso in here now. Yeah, go. If you guys have setups for today, go ahead and drop them in this particular post. And then if you guys are trading Mexican peso with like CFDs, then the market looks like this. So your chart's going to look a little different. It looks like this move here, and you have the short over here. So this is what you're looking at. All right. Hold on. Okay. Saved. How much is peso worth on futures? It's worth, let me tell you right now, 500,000. So under lot size, if you're looking to do if you're looking to do it that way, it's going to be 500,000. All right, let's see updates with indices and Q dropping again some more. Nasdaq still just holding it down over here. So can we get an entry on Nas? Is it fair to look for, let's say, something new here? We saw the clearance of the liquidity, so which was this here. We saw it trade up higher. We built up some demand over here. Nothing crazy. Some more liquidity up here as well. And then that's about it, though. So we don't get a higher high or anything. The market takes the low, gets up to here, but just loses momentum, really, more than anything. And then now it's working its way back down. So we're starting to work our way down here. Is this enough proof that the market is going to stay bullish? I don't think so. I wouldn't look for another position on this. I think we already saw the exchange from sellers to buyers here. So we already saw like the sells here were liquidated. Obviously, we saw it move on up here. Now we're starting to build up some liquidity. But it's not like we create a whole bunch of, bullish demand. And, for example, we got higher highs, higher lows. These higher highs were an absolute fail. So this just wanted to lure in money more than anything and then dropped. So, yeah, I'm not totally in love with any positions there by any means. It looks more bearish. And look at S&P. S&P gives you these clues too. S&P took out the highs, came down below this low, and then it's struggling to stay within it. Came down, took out the lows, cleared this imbalance, still hasn't mitigated here. The market is staying more bearish than it is bullish, maintaining these lows. So no, I'm not necessarily looking to take anything. I would rather have us go down to those Tokyo lows here with S&P or with NASDAQ over here. So I'm going to hold off. All right. With that being said, we have crypto here. Sol, baby. Let's go. Where are my Solana holders? How are we feeling today? Feeling good or what? I feel like a lot of you hold Solana. I have definitely a nice little Sol bag. Let's push Sol. Yeah. Yeah, crypto had a nice run yesterday. We didn't have our crypto session yesterday, but basically my thoughts were like, just buy whatever you like. That's what I said yesterday. Just buy whatever you like. So I've been scooping up a little bit of virtual, a little bit more of this. Alonzo, you asked me a question yesterday, so let me go and answer it. A few of you asked me questions, so let me go and... Why are you bullish on virtual? Is this something you see yourself holding long term? And when you invest in a coin, how much percentage should it be of your portfolio? Okay, so I like to look at things based on their risk. So based on market cap, and then what does that mean for how successful or unsuccessful something can be? And you know what? Let me see if I can find this. Mike, I have Veracity and Sand. Should I just sell them at ATP? What does that mean again? ATP, all-time. Wait, you never sold your VRA from like 2021? We literally did like a 40x on that. At this point. No, I wouldn't sell them at this point. Nah, let the market run. You've already been holding this long. You know, at this point, nah, I wouldn't just take the L. Or take the wherever they're. I don't know if it's at a loss or anything, but I would let the run, the cycle do its thing. take your exit later, probably in a couple months. So okay, so I have a couple different things. Let me find this because I want to show you guys what I see here. For portfolio, is this the one I'm looking for? Let's see, open a new tab. I think this is the one. All right, perfect. Yeah, okay. So let me show you guys something. I should probably just make this as a video as well. Can you guys see that? No, you won't be able to see this. All right, 1 second. Let me open this on publish. Let's see here. Share this via social. Hold on. Okay. So, 2 different ways to build your portfolio. I use like 250K as the portfolio balance, but one based on risk and other one based on sectors. So, for example, 15% of your portfolio, high risk, 52% medium risk, 33% conservative. This overall, I would say, is a more conservative approach. And then the second way is based on sectors. So you're more diversified in the different sectors of the crypto market itself. So decentralized finance, smart contract platforms, meme coins, AI and big data, gaming, real world assets, ISO 20222. These numbers you can shift around, and you can have that based on your belief in the sectors themselves and or how you believe. Like, that's one way to do it. Or instead of being so focused in sectors, you can focus on just risk in general. And how I determine risk over here is based off of something like, and these are just examples that I was building out over here, but based on market cap. So here, example, low risk, 3 billion market cap or more, medium risk, 500 to 3 billion market cap, and then high risk would be 500 million or less. So dog, for example, I would consider technically based off of this. At the time it wasn't, but right now it did slip under 500 million. So when I was writing this out, it was over that. So it would have, now it went from a medium to a high risk. I think anywhere from 250 to 500, you could still go medium high risk. The only reason I would still keep this as a medium risk coin is because it's tied into Bitcoin itself, and because of the tokenomics that are really healthy. It's unruggable. But yeah, so you can play around, but these are ways for you to think about how to organize it. So how much of your portfolio do you want to be high risk? And the reason it can be of your favor is because if you have, let's say, 15% of your portfolio, so instead of 250, let's just make this easier. Let's say it was like, actually I can't edit this one, but let's say it was 100,000. So 15K of your 100,000 would be high risk. Worst case scenario, let's say you lose it all. So you're down 15. Okay. Best case scenario, you could hit 5x, 10x on these. So that 15 would make you 75K, 150K. Great. Medium risk, these are coins that more than likely don't go to zero. You get a decent growth, or worst case, you see, 25, 50% drawdown. Best case, you can still see 3x, 5x, maybe even more. So a lot of your portfolio is still okay. Same thing with conservative, right? These are like Sol, Link, Bitcoin, top 25 coins, 3 billion and above. These are the ones where, okay, if you, let's say you had 100K, well, 33,000 is in that. If those just hit a 3x, then you basically, if the rest of your account just you miserably trade or invest, but the conservative ones, which are very likely to not go and lose aggressively, but for example, like Sol, let's say you were picking up Sol at around like I've been talking about Sol since it was at like it's fucking $8. But let's say that, right? 250. Right now it's at 200. Can Sol get to 600? I think that's definitely a possibility. So that alone would cover if you the rest of your portfolio you took a big L on for whatever reasons. So this way, like you can still mitigate your other decisions based on how risky they are. And some of these, are bound to play out. And within your, risk, let's say you could have, you can organize what percentage of everything. And this is based on your initial deposit. Now, if then you start to dollar cost average into things, obviously things get a little bit more complex. But yeah, so these are kind of two different ways you can approach it, whether it's going to be based on portfolio, risk, or based on like that. Am I still buying JUP? I haven't bought JUP, but I do think it's at good prices. If you did want JUP, I think it's at a good price, but I haven't been buying up more. I sold majority of mine a while when it was well over $1. If you guys remember, I posted during elections time. I posted, it was in December. I posted how I was going to take some profits. That was in my Telegram. That was before we had the community. So I did. That's what I did. Took some profits, sat on some stable for a while. So right now, Chainlink doing its thing. I think the Chainlink callouts were... Oh, these were low, man. Chainlink has been such a good one. I think it was at around, let's see, it was in here, I think, in this imbalance, like under 10, I believe. So a little 2.5x, pretty nice. But yeah, hopefully, did that answer your question? XRP. Oh yeah, you asked about XRP and whether it can hit you said you've seen people talk about it hitting 100. That would be a 33x, right? So that would mean for XRP to hit $100 in this cycle, I think there's a 0% chance. We would see the market cap of XRP have to go and hit about almost 5 trillion for that to happen. So Bitcoin would be sitting at about $250,000. That's the equivalent of XRP. For XRP to be at $100, it would be the equivalent of Bitcoin getting to 250,000. I do think Bitcoin's going to get to 250,000 eventually. It maybe even happens this cycle, but XRP getting to that in this cycle, I absolutely know there's no fucking way. Could it hit $10 this cycle? I could see that. I don't think it's impossible, but I would bet 6-7 figures that XRP does not hit $100 in this cycle. ETH, even ETH hitting 5 billion market cap this cycle is such a stretch. That would basically be seeing ETH at like 40,000. So yeah, I don't see it. Not yet, at least. But you know what? I've been wrong before. But I wouldn't bank on it. Okay. So I think that answered the crypto questions, right? Yeah. All right, let's go check in on our indices here. Oh, look at that. NQ. Played out of here. Pushing higher. Dow went a little bit lower. Made its move. And then S&P losing some steam. One of the advantages of trading, I think, for the sake of longevity, is the detachment from every move. So like the move up, the move down, just everything, and realizing how unimportant it is to be in every move possible. I think that we get very much like tunnel visioned into having to be involved in everything that happens. And then what ends up happening is you stop trading your system and you just trade. You just want to be in the market. You just want to, it's like you get addicted to the feeling of the risk and the adrenaline. How do you organize with centralized and uncentralized wallets? What do you mean organize? You just like write them down on a piece of paper, or I don't know if I understand your question. I can see ETH 10K? Yeah, I can see ETH 10K. This cycle, it's possible. I'd say it's more likely than unlikely. Okay, so here's what. Let me wrap up with this. Today, Chewy, good old Chewy, guys. The journey continues. We're up roughly almost 15% on Chewy. First target, we're looking for around like 63. That would put us at around 50%. Discounts of the day, nothing actually that I'm looking to do. Just to mention again, I took profit on Tesla yesterday at like a little over 350. Let's see. Solar plays, ENPH, slow but steady. Our Weeble play today, 1450, just kind of chilling. And then Kindrel still in entry levels. So kind of boring so far, but I haven't scouted for more stock plays recently. So I might do some digging again here soon. If you guys have some powder, you know, trying to get in on something, I'll see what I can dig up. But that's about it. Yeah, I mean, I'm chilling. I'm chilling on NQ. Our original entry from down here was the Shakeout setup. I didn't have the conviction to buy because of how quickly we went up and back down. So had we had a better just demand for a little longer, then I would have participated. I know some of you pulled the trigger anyways. Played it off the order block after it did that, and good stuff. I'm sure you guys are very happy with your current returns. And this is why I said, guys, don't look to buy Dow because it's been the most bearish. You would just be stuck here while NQ is just ripping at the moment. I'm curious about shorts, possibly with something else later, but yeah, we'll see. Anyways, with that being said, we have on the radar for today, just to wrap up and to give you guys reminders, gold. Gold here is sitting about 150 pips away from an entry, at least for me. And then we have Mexican peso that's just chilling, consolidating here right now. And finally, we have oil here. However, oil, despite an aggressive move down, it quickly bounced right back up. So I don't think I'll be looking to short there. And I'll be more focused on maybe a buy later on. But I'll give updates on that here in the future. Cool. Gold on CFD already broke the high for me. Cool. Yeah, I don't think CFDs are the most accurate data feed, so I'll stick to the futures feed. Anyways, guys, much love. Thank you for hopping on again today, as always, for joining me here for the last 90 minutes or so. Here are communities. If you don't have access to our free community, scan the code on the left. If you're there, then make sure you actually make the most out of it. Tons of value in the classroom. And if you want a free funded account on top of getting top tier mentorship, being part of our private community, getting the exercises to actually get better so you're not blindly approaching trading, and you want to actually start not just passing but keeping these damn accounts, then scan the code on the right, book a call. You'll be talking to the team, and we'd love to have you for September because we are about to go ham. So good stuff, guys. I'll see you guys tomorrow. We'll be back at it again. And then for the syndicate members, I'll see you guys tonight. So take care, guys, and I'll catch you on the next one.